Good afternoon all, and welcome to this webinar, Off-Payroll Working in the Private Sector, the Impending IR35 Rule Changes. We'll give it a moment just to let everyone connect, and in the meantime, you will see coming up on your screen a poll question which we'd like to ask you to answer, please. How confident are you that the changes are clear and you can finalise an implementation plan? This will give us an opportunity to gauge the level of understanding you've got now. We'll check again at the end just to ensure how effective this session's been. Should you have any questions as we go through the session, please send them via the Q&A button, and we'll answer as many as possible as we can at the end. We've left 15-20 minutes to do that, and look forward to getting those in. So answer that poll question for me then, please, and we're ready to go. Okay, right, I think we're ready to go then. So, welcome to today's webinar, brought to you by Saffery, one of the UK's leading accountancy firms, and the Giant Group, a leading contingent workforce management company for the last 30 years. Our subject is off-payroll working in the private sector, the impending IR35 rule changes. You may have seen our earlier event, which introduced the subject and gave an overview of the rule changes. If you'd like a copy of that, and it's done on a recording, simply let us know via the Q&A button, and we're just about to, I think, give you the link now if you want to take a quick copy of that, and you'll be able to look at that at your leisure. Right. So, not surprisingly, I think many have left IR35 to the new year to-do list. So the need to address it is now urgent, and our aim today is to provide more detailed information to you so you can actually now finalise your plans. This session assumes your knowledge of the principles as we seek to delve into some typical scenarios and practical options where we've tried to anticipate as many of your questions. So the session will cover who the rule changes affect, implementation planning pointers, payment and payroll options, and pitfalls and risks to be aware of. Our keynote speakers today are from Saffery. We have Angela Ferguson. Angela's a director specialising in employment taxes in her role as the National Head of Employment Taxes. She assisted clients with the implementation of IR35 legislation in the public sector in 2017, including the design of new processes in order to evidence compliance. She's now involved in auditing these processes and preparing the private sector for April 2021. From Giant, we have Dan Haslam, who is Group Sales Director, and his role includes helping clients to manage their contingent workforces compliantly and cost-effectively, using the whole range of Giant's services and products. Dan's also a member of the board at the FCA, the UK's leading membership body for umbrella companies, limited company accountants, and CIS payroll providers. I'm David Hopkins, a workforce management consultant with Giant, and I'll be the chair for today. Our format will be conversational, so I'll put my own questions to Angela and Dan in order to give us a full view from a tax and practical perspective, and we'll then turn to questions from you, the audience. We've already received a good number of questions, thank you, on your pre-registration, so please feel free to submit any others, and we'll go as we go through the formal session. We want to hear from you, so we've allowed probably 15-20 minutes at the end to cover as many as we can. If you've anything specific to your situation that you wish to discuss, we will of course be giving you the details of Dan and Angela at the end so that you can pick up on those separately. And finally, we're broadcasting remotely, so apologies in advance for any sound or technical issues. I think we're okay at the moment, so fingers crossed, let's begin. Angela, good afternoon. If I can start with you, please. How prepared are you finding that your clients and end hirers in general are at the moment?
David, thank you for that. I see we've had a result for the initial polling question, which actually looks reasonably similar to my experiences. So in terms of how prepared, we've got 18% not at all, 73% reasonably, and very prepared 9%. From my experience, a lot of my clients are those end clients, those engagers, and very many of those had got ready for this 12 months ago, and were quite prepared. So I think it's been a case over the last few months of them picking up the IR35 baton again, because of course clients have had lots of other things to deal with furlough and everything else that COVID has brought. But also I think potentially people have maybe been secretly hoping it wouldn't happen. So put too much effort in just in case. So I think, as you've said already, it's come onto the sort of to-do list for the new year, and very much a focus. And it's meant obviously people having to perhaps remember where they got to last time, retrain any sort of internal people they had in that working party. But it's also meant that they've had to relook at who they're engaging off the payroll, because that list may very well have changed significantly. So there is still a lot of work to be done, but there is time to do it. So I think people reasonably prepared, I would say, is a fair assessment in my experience, but still a few to tick off.
Okay, and given that there are a number of stages to go through, when would you recommend starting to do the assessments?
That's a good question, and it's always been something that I've said, don't do that too early, because you're sort of putting your marker in the sand there, particularly if you're having the inside IR35 decisions. It could then inadvertently cause you issues from other tax perspectives with the authorities, namely criminal corporate offence. If you know that somebody should be inside and you know that person at the moment, should be operating IR35 on themselves because the rules don't change till April, then you're potentially facilitating in tax evasion. So that's always been something I've said, yes, by all means, do some background, some pre-assessments, but don't start issuing anything too soon. So I think we're within the remit now to actually start to go through that formal process. So we really do need to be doing those assessments and getting that background information now, purely because of the timescales. We're nearly into February. We've only got a couple of months now before the new rules are in. And of course, we need to build in an appeals process and time for that to actually be carried out. So I think now's the time to really get going on this.
Okay, yeah. Dan, good afternoon. If I can turn to you then, the timescales obviously vary depending on how many contractors you have, but what are the things that are likely to catch people out in terms of taking longer than they might think in this process?
Good afternoon, Dave, and good afternoon, everybody. Well, I think the first thing, I suppose, that is the definite sort of catch out that we hear a lot is actually businesses starting to realise that they don't quite know how many contractors they do have. So one thing that we definitely hear regularly is now IR35 is forcing people to sort of do a register, if you will, of understanding exactly how many contractors they've got. Often for some businesses that can be an eye-opener. So I think getting a handle on the actual numbers is absolutely key. So that's certainly work that you can get on with now before sort of doing SDS assessments. Excuse me, I think the other thing is communication as well. So ensuring that you've thought through a communication plan for your internal staff so that they're trained and understand the impact. Obviously, you've got to communicate the decision once that decision's been arrived at, and then also deal with the contractors in terms of talking to them about contracts, rates and negotiation. So all this does take some time. So I think it's important, to Angela's point, now is the time really that you should be looking at getting your assessments done and starting to issue those SDSs so that you're giving yourself some time to communicate to the workers, and then obviously whatever the knock-on impact from that will be. I think the other thing that we sometimes hear is that with clients that are looking to use CEST as the basis of their determinations, realise that it is a little bit more labour intensive, especially if you've got quite large contractor volumes. So if you're doing volumes of 3 digits or more, then to use assessed-based approach can take some time. And obviously there are other alternative assessment models out there that you may want to use if you've got volume to work through. So obviously, if you know how many contractors you've got, you should be able to make a bit more of an informed decision as to the most suitable assessment approach. And then I think the other thing just to add, I think, is if you're looking at outsourcing any of this work, or if you're looking at bringing in a third party to do some of this work for you, is also ensuring that you actually get the time and commitment of time, because clearly any suppliers in this space, which would include, you know, payroll companies as well as IR35 assessors, accountancy firms like safferys, are extremely busy in these next couple of months supporting clients. So if you are thinking about getting external support, then you probably need to engage now and get that booked in so you get the resource that you need. So I think there's a load of reasons why now is the time to take action and not delay any further.
Yeah. Okay. So just maybe to give us a rough idea then, if I've got 20 contractors that need to be assessed and to go through this process, how long might that take me, and what sort of efforts involved in terms of my time, if you like, between now and April?
Well, I think if you've got 20 contractors, in terms of doing the assessment, it's not a huge number. So, you know, if you're going to use CEST, for example, I would say if you can get the meetings booked in with those workers, you're probably looking at a sort of 2-week process, I would say, to try and get through that in good time and get the determinations done. But obviously the assessment piece is just one part of that process. You've then got the communication, as I said, you've got potential rate negotiations if you've decided that some people are inside IR35 but the business critical. You may be considering increasing the rates, so you need to work that through and get it agreed with the contractor. The knock-on impact then is if you've got recruiters in the supply chain, clearly the recruiters have now got some administration to do in changing contracts as well. So I would say sort of end-to-end on 20 contractors, I'd say maybe a couple of weeks for doing the assessments and getting that piece done, 2 to 3 weeks for the communication and the contracts. And then you've also got the potential onboarding into the new payroll options, which again is prudent to leave another couple of weeks there. So in effect, you're probably looking at something like 2 months, even for 20 contractors, if you're going to take this at a pace which feels comfortable. Clearly, you can do it in a lot quicker period of time, but that's, you know, it's going to be a rush. And the lesson I think we've learned on this is that it's not something you want to rush. You want to make sure you're doing it in good time. But obviously, there is a hard deadline approaching, which is the 6th of April.
Just coming back to assessments then, Angela, and creating these SDS documents, are role-based assessments okay? And is that really taking reasonable care as defined by HMRC?
Yeah, I think it depends on the size of the workforce you're looking at. So role-based assessments are fine, but I would query that if you've only got, say, the 20 people to look at. Often you'll see this with larger businesses who are engaging thousands of contractors or hundreds of contractors, because it's simply a way of initially just getting a view on certain roles. Then there does need to be that individual review of whether there is anything for any of these people that is slightly different to the norm, and they then need to be looked at separately. Of course, every individual contractor or consultant will need to have their own SDS, so their own status determination statement. Yes, they can all be based around a similar template for a certain role, but it really must reflect how that individual works. So that reasonable care is really looking at the amount of the workforce you are reviewing. So I would say it is reasonable where there's lots of workers, but if there's only, you know, a handful, then I really wouldn't see it's justified as taking reasonable care.
Yeah, okay. Now, a little earlier, you mentioned the appeals process that must be in place. So what does a good appeals process look like, and what are you seeing your clients do by way of preparation?
Okay, yeah, this is really important, because this will really help people look at the timescales for getting this in place. So an engager or an end client has 45 days to respond to the receipt of an appeal. and that appeal could be from the contractor or an agency if an agency is involved. So they obviously need to work that back. Potentially we're obviously looking at all services supplied after the 6th of April. So if people are invoicing on a monthly basis, that's going to affect payments at the end of April. So working that backwards, we're looking at having sort of everything issued and ready to go by early mid-March. What I would suggest, and where I've been working with clients on, is that whoever has done that initial assessment and review of that individual contractor who appeals shouldn't then deal with the appeal. So it's good to have some objectivity, whether that's somebody else different in the HR or tax team, whether it's somebody external like ourselves. So some clients have dealt with that initial piece in-house, but where they've got people who are on the cusp that they want that independent opinion on, or somebody who might have appealed a decision, they've then looked externally to just get that objective view. I think that then sort of justifies that they have an adequate process in place. You know, it's objective, it's open, it's transparent. And it's good to note all of this down in a policy. So when issuing an SDS, ensure that the contractor knows they have the right of appeal and what that process is. And finally, just to make sure you're recording everything, because of course, the revenue have promised a light touch approach. When that starts to phase out, it's always going to be great to have those records of conversations and processes ready should the revenue need to come and ask any questions at a later date.
Yeah. Dan, what was your experience with appeals last time, and have you seen any changes this time around?
No, I think the process is not changed from last year. It's the same process with the same timeframes around it. I have to say I'm yet to see an example of where a hirer has overturned the decision based on an appeal. Maybe Angela's seen more of that than I necessarily have, but I'm a bit of a pessimist. I must admit, when I come to this appeals process, I think it's a little bit of window dressing to give the contractor a voice. One of the things that was clearly fed back from the 2017 changes in the public sector was that the contractors didn't feel that they had any voice in this process. So yeah, it's right that they put this appeals process in, but there's no statutory there's only a statutory requirement to facilitate an appeal, not to actually change a decision. So I don't know if that's consistent with you, Angela. Have you seen any clients overturn it?
Yeah, I think the only time, particularly when working with the public sector over the past few years, has been where those blanket assessments have been made. And obviously, I think that might have been a bit of a knee-jerk reaction from the engager. Then once they've had their workforce up in arms, it's kind of kicked them up that perhaps they need to do something a bit more bespoke if they want to keep the key people. So that's the only sort of time I've really seen, decisions change or the approach by end clients change. I think now everybody's had a bit of time to learn from the public sector, and perhaps we've got better processes and a bit more time to think about it. But genuinely, I have had a couple of cases where, somebody who's done the assessment wasn't as close to the detail and didn't really have that link in terms of what the person was carrying out in their day-to-day role, and that bit of extra information from the contractor really helped and provided the evidence needed. So I think we'll have to see how it develops, but it's there, and it should be used if there's a genuine case for it.
No, it's good. I think it's good to hear that there are examples out there where businesses are considering the feedback. It shows that it isn't window dressing, and they are actually following a process, which is good. So actually, one question I've got for you, Angela, it just springs to mind now, because I was asked it from an agency this week. So obviously, we're all very, very clear that there's this 45-day response time from an appeal. But is there any time frame about how long the contractors got before they raised that appeal? I had a good read, and I couldn't see anything in the
No, I think this was something that was raised in part of the consultation as well, because it ultimately it could be raised at any point in time, at any kind of grievance. I think we'll maybe watch this space in case we see any other guidance amendments before April, because quite clearly it doesn't make sense to have contractors appealing 2 years after they've been somewhere. So you doubt it would happen anyway after such an amount of time, but there isn't anything set in stone as yet apart from this 45-day window to respond.
Okay, so if we start to look now then at the further down the supply chain, if you like, and some of the implications here, I think one of the major implications of these changes, of course, is the risk to end hirers of non-performance throughout the supply chain. So is it a good idea then to review the agencies that you work with and establish a preferred supplier list?
Yeah, many sort of clients that I've worked with have gone down that route. So as part of this exercise, they didn't realise they engaged with quite so many agencies. And obviously there is a risk there that if everybody's not doing the bits, then that liability can get passed up the supply chain. So lots of end users and clients of mine have carried out that exercise, selected a sort of more of a short list of preferred suppliers. They may have looked to see if they're affiliated with the FCSA as a sort of badge of them being compliant, because as many people may know, to actually be FCSA affiliated, you do need to go through quite a thorough audit from a tax and legal perspective. So they've seen that as a sort of tick in the box. You know, I do think you need to sort of really keep a hand on the supply chain and really ensure that those status determination statements are being passed down and are being acted upon if the agency needs to deduct tax and national insurance.
So Dan, this presumably extends even further down the supply chain, and it applies to other fee payers such as umbrella companies. What would your advice be in respect of reviewing them?
Well, I mean, clearly as a board member of the FCSA, I'll give a plug to the FCSA as a start for 10. But I think also as well, just being, you know, transparent, the FCSA is helpful because, as Angela's pointed out, there's audits that need to take place from the likes of safferys and other accountancy firms and lawyers on those member companies on an annual basis. So there's some level of due diligence taking place, but I wouldn't, if I was an agency or if I was a client, take that as a sort of rubber stamp. I would also have my own RFP process to request, you know, information from that payroll provider to make sure I'm assured that I've done my own due diligence on them, so not just taking the sort of badge for the sake of it. There's definitely been plenty of examples that we've seen from public sector where payroll businesses have entered the supply chain under the guise of as the fee payer, and that they will deduct the right levels of tax and NI, but actually they haven't been doing so, and all they were doing was taking a margin and continuing to pay workers gross, even though the client had put down a decision that said they were inside IR35. And then, unsurprisingly, they've then gone on to disappear, which presents a tax risk back up the supply chain, ultimately to the end hirer if that tax can't be recovered. So I think it's really important, if you've got any businesses in your supply chain or recruiters as well as payroll businesses, check the financial stability, check the track record, check what due diligence, you know, they do in terms of payrolling, asking for wage slips or even proof of RTI statements over to HMRC. So do everything that you can to ensure that there is compliance out there. I think the payroll industry can get a bit of a bad press sometimes, and you know, I've spent a lot of time talking about some of the more unscrupulous providers out there, but let's not lose sight of the fact that there's a good chunk of the industry that does payroll correctly. But whilst it remains a non-regulated industry, which I think again within the FCSA would welcome regulation in the space to help make it a lot clearer for clients who they can use, whilst it remains non-regulated, you do need to make sure that you do your due dil and check, because I think IR35 poses a risk, but actually if you end up with poor payroll providers in your supply chain, that is a much bigger risk for you as a business.
Yeah. Okay. Well, I think we've done quite well to get 25 minutes without mentioning COVID so far, but mention it now I must, I think. It was probably the main cause of implementation being delayed last time. So it does look certain that we're going to go ahead this time. Question is, are we seeing any new issues which are being caused by COVID that weren't apparent in the last preparation, Angela?
Yes, I mean, sometimes these issues can actually be helpful, potentially. For contractors, maybe they were potentially always attending a certain workplace. Maybe they were, it was argued that they were under the control or supervision of that engager. So potentially this working at home more has helped bridge that gap to support a self-employed position more than it might have done in the past. So somebody to be validly outside of IR35. Just need to watch a couple of areas that I've seen around equipment. So a lot of engagers have tried to be helpful and potentially supplying more office equipment or IT equipment to contractors they might have done in the past. Obviously that can be seen as a big no-no for IR35 purposes, because they're more akin to an employee if they're provided with all of their sort of tools of doing their job. So just watch that one. But potentially though, it's been an opportunity for contractors to work for other people and have more separate assignments and build up that picture that they are genuinely operating in business of their own account. So I think it's given maybe more opportunities rather than barriers than people were facing this time 12 months ago.
Yeah. Anything to add, Dan?
No, I agree with what Angela said there. It makes sense in terms of the sort of part and parcel of the organisation, and the control aspect would certainly start diminishing people working from home. I think the other thing, it's interesting, COVID impact in across the contracting industry. Different sectors are seeing a downturn and other sectors are seeing an upturn as a result of COVID. So one of the things that we were sort of observing, I think, last year is that when we did the dry run and the IR35 was postponed, a lot of contractors were delighted, obviously, with that. But then very quickly it became quite clear what the impact of the pandemic would have on the availability of roles. And maybe there's an argument to say that the client would be more have a bit more of the cards now than a contractor asking for sort of rate increases, etc. That said, I think if you look at IT recruitment, there's definitely been a pickup in some areas there based on businesses wanting to really drive to online strategies, so roles are getting placed. I do think, generally speaking, given that there's been another 12 months for the contractors to acclimatise to these changes, perhaps they're a little less militant this time round than last time, but I'm sure the recruiters on the call would probably disagree with me based on some of the conversations they have. But hopefully this time round, given the 12 months that they've had to digest it, we can progress without as much sort of noise and appeals as we had last time.
Okay, so now let's look at some of the practical implementation options then, because I think HMRC believes that the vast majority of limited company contractor assignments are going to be deemed inside IR35 rules, so their remuneration arrangements are going to have to change. So Dan, will you talk us through the main payroll and employment options then?
Well, I think the first obvious one is actually for a client to look at taking these workers on as permanent employees. So if there's no agency engagement and if they're engaged directly with a hirer, then potentially, a hirer could look at taking on those staff either on a fixed term contract basis or offering them permanent employment. I don't see much of that happening in the sector for two reasons. I think one, employers are probably not wanting to take on more employees. I think everyone's looking at trying to keep the workforce as agile as possible, especially after the last 12 months that we've had. But then I also think even inside IR35, contracts are still not very keen to tie themselves towards, employed roles. Obviously, I'm talking in generalist terms here. There'll always be the exceptions, but I think most contractors want to continue to take on work and pick and choose the work that they want to take because they find it interesting that way, and that's why they contract. So taking people on directly is an option. I think the same applies where recruiters are involved. If the recruiters offering PAYE to go onto the agency's payroll, again, some contractors may wish to do that, but we don't see a lot of that. We see the vast majority of contractors probably electing to go through the umbrella PSLs that the agencies have got, so that they can retain that sort of continuous employment through the umbrella and pick and choose to work for different assignments. So obviously umbrella, as I said, is probably the go-to solution in the market, both for hirers and for recruiters. It's well established, or at least everyone knows what a compliant umbrella should be and how it should operate. So I think you're going to see the big bulk, maybe 3/4 of contractors caught by IR35 will probably end up working through an umbrella business. There are a couple of other different options out there as well. So there is something called the fee payer model or the deemed payment model. That's where a payroll provider, which could be an umbrella company, can provide a service where they'll continue to pay the worker through to their limited company, but deduct the taxes that are due under the legislation. So we offer that, and we see probably 15% of contractors that are affected actually still want to retain their limited company and pay through the limited company. So we jump into the contract chain and do the deductions and payaways. Why do contractors elect to do that? Because it's a bit of a strange one. They're paying tax like an employee effectively. You think they'd want the employment rights, but a lot of them still want to retain the flexibility of processing expenses through a tax return. They might have other assignments that are outside of IR35, so they want to keep the billing going through the limited company still. I also think there's an element of, this is the way we've always done it. I've always got paid through my limited company. I don't want to move to an umbrella. Sometimes we hear contractors that look at the umbrella contract get quite nervous about the way that the umbrella contracts are structured, because there's usually basic pay and bonus elements in there, which is a sort of a mechanism that's used to process expenses. But sometimes contractors can get quite nervous with the way that the contracts are structured, and they just choose a simpler contract service approach and still get paid through to a limited company. So that is an option. And then the third model that's getting quite ahead of steam out there and seems to be getting talked about more and more is PEO, which is Professional Employment Organisation. I've talked about a few times on these webinars. It looks very similar to umbrella in the way that the PEO business would employ the workers. The only key difference is that transparency on pay rate. So under a PEO model, the agency or the hirer, if the hirer is doing it, states very clearly to the worker what the PAYE rate is that they're on. That's reflected in the PEO's wage slip that they produce to the worker. So the onboarding is a lot clearer, and everyone's very clear on the rate of pay that this worker is being paid. Whereas if you contrast that with umbrella, on the umbrella model, the umbrella company receives income from the agency or the hirer. They have to make deductions for employers' costs, and then that leaves a rate, which is the real rate of pay that the worker's on. But often the contractors don't quite understand that actually this lower rate is their actual rate of pay. They thought it was this higher number. So that's why you've had things like the Good Work Plan and key information documents introduced into the market to try and help contractors understand the real rate of pay that they're on. And the PEO model kind of cuts through that and states very clearly, yeah, this is the rate that you're on, and it's simple and transparent. So I do think now all roads are leading to the same sort of net take-home pay from a tax perspective. If that PEO model is the simplest way to sort of do the maths, then perhaps that will build up ahead of steam, but we'll wait and see. So one word of caution on the PEO model. I think there is some variances of it and different sort of hybrids that are out there, one of which is a co-employment model, which seems to be doing the rounds and being promoted, which in principle is a legitimate compliant model. But I think when you pick under the surface of it, co-employment means that it's the agency and potentially a payroll business that are actually employing these workers. Often the reason for the structure in this way is to try and avoid VAT being charged. So you often see it used in sectors where there's where they can't claim VAT back, like medical services and financial services. Not been thoroughly tested yet. Lawyers are a little bit nervous on co-employment because it's not 100% clear who has the risk. Both parties should have the risk. So just a word of caution there that when we talk PEO, there are different flavours, just in the same way that when I talk about umbrella, I mean compliant and straightforward. But other people could be talking about offshore schemes and EBTs and all sorts of different non-compliant stuff. So just be aware of the sort of catch-all terminology.
And in terms of the different approaches then, Dan, are there any likely cost implications of doing things in different ways? And are there risk versus cost considerations in the different approaches?
Yeah, absolutely. I think this whole thing is all about a sort of a linear line of risk versus cost as to where a hirer wants to sit. So, you know, if you're making a decision to do blankets or to not even engage PSEs at all, like the banks did, then that's a really risk-averse approach, which also happens to be the most expensive one potentially, because a hirer is potentially taking additional costs on there as well. versus doing assessments, and trying to ensure that you can change your working practice to keep people outside of IR35, then obviously that's got less cost associated, but it's a bit more risky because you've got to make sure you've done the assessment properly and you're open to scrutiny from HMRC. Similarly, in sort of with a payroll lens on it, if you take someone on as an employee of your business, that's the most expensive option because you've now got to pick up employment costs as well. Vice versa, you could look at the umbrella solution, which is you can take the existing rate you pay the PSC, pay it to an umbrella company, so there's no additional cost for you as a business, but the worker's rate of pay starts reducing and their net pay reduces, so the risk is therefore that the contractor doesn't want to work and accept this lower rate of pay, and then you've got a flight risk of people potentially leaving. So yes, you think you've got to gauge what your appetite for risk and cost is. That will influence what your IR35 assessment approach or not will be. And then the other bit is looking at your contractor base. How business critical do we think these guys are, and do we want to pour a bit more money in if we've deemed people inside to increase rates so that they stay on assignments? So it's a tricky one to navigate, but once you've done your sort of thought process, got your assessments done and done your business critical analysis, then you should be able to work through your costs and how much more money you may want to pay people.
Any comment on that, Angela, from a tax perspective?
No, I think Dan's covered it perfectly. It is, you know, down to, for me, it's more, I see it where we've got key people, and where an organisation or an end user's got key people, they might be more flexible in terms of who's going to be ultimately bearing those additional costs of bringing somebody onto the books if they're deemed to be inside. So yeah, I think it's that assessment of who people have, who are off payroll and who are the real key workers, is important then to know what strategy you're going to take with that kind of a population.
Yeah. Okay, good. Listen, thank you both for your responses so far. And just before we go to the questions then, and we have left 20 minutes, which is great. Perhaps you'd both please give us a quick summary of what you see to be the major pitfalls and risks that everybody needs to be aware of and take away from today. Angela, do you want to give us a starter?
Yeah, I think it's probably worth just summarising probably some of the points we've mentioned already. So I mentioned about status determination statements and perhaps not doing those too early. Obviously now we're in the stage where we do have to formalise that process. I think it's key that people do invest the time to carry out these assessments. Role-based, it is fine for an initial position, but we really do need to have a bit of individuality where that's needed for people who aren't quite wholly into a set role. It's important that people communicate with the supply chains, because I've seen where that doesn't happen, people are assuming that somebody else is doing something in the chain, and that's where we can get real problems. We might as well be open and honest throughout the supply chain and just agree who's doing what, so we don't have any surprises later on. And I just think these care's needed, you know, if we do get involved in appeals and disagreements with contractors, it's being open and giving the contractor the opportunity that they're going to get a genuine process there. Their appeal's going to be heard. We kind of want their buy-in as well, because at the end of the day, we want them to keep working with us. So it's important they understand why the engager's having to carry out this assessment, and you know, it's not just to make things difficult on the contractor. It is a requirement from the 6th of April onwards. And it's evidence. So one thing I would say is don't just trust what people say. Make sure we're asking for evidence of certain things that they may be arguing, help them to be outside of IR35. So always ask for that documentation, because it'll be vital in future.
Yeah, I think just from my perspective, Dave, I'll just reiterate some of the comments from before, which is if you're looking at outsourcing any of this or engaging with any suppliers, whether it's IR35 assessors or payroll businesses, you really do need to pick up the phone and start doing that now, because those businesses will be busy over the next couple of months, and you don't want to be sort of left at the side with not getting your first pick of business that you want to engage with. Also, your due diligence as well. So if you're going to go down an RFP road, then again, time-wise, you need to crack on with that and make sure that you've got that out and you get the responses that you need. Otherwise, you may start having to make some reactive decisions because you've got the deadline looming. I think, yeah, I think they're the key ones. I think anyone who's working on the basis that this is not going to happen, I'm not going to sit here and say it definitely is, because I don't know. None of us know. COVID taught us that, or last year certainly taught us that anything can happen. But even the most vociferous campaigners against this tax previously are now accepting that this is, you know, highly likely to start, because just to be able to go through to get it off statute and for it not to happen would have to go through a parliamentary process, which practically speaking we can't see that happening. Jesse Norman came out to a question asked to Parliament 2 weeks ago, I think it was. Will it be delayed again? And the first part of that response was the government are committed to this happening, so you've got to prepare for it and not leave it to the last minute. And if it does get postponed, then so be it. But to not prepare, I think, puts you in much more risk.
Good. Okay. Thank you. So as we move to your questions, then, can I? I'm just about to put the poll question back up. Perhaps you could answer that again for us, please, just based on what you've heard in the last half hour or so. How do you now feel? How good were these guys?
This is where we get nervous, Angela.
Yeah.
Yeah, probably. Yeah, unless it's made people feel like they've got more work to do.
Yeah. Right, so as I said earlier, we had a lot of questions early on. We've received a good number since, so I'll just work my way through those, and we'll get as many done as we can over the next 20 minutes or so. Any that we don't pick up, we will do at the end. We will document answers to those and send them out. So let's get on with it. First one to you then, Dan, I think, is how does agency worker regulation affect or link in with IR35?
Okay, so, well, basically the AWR rules only apply if IR35 applies. So if if someone's inside IR35 and they're to be taxed as an employee, they move through to an employed solution. So that would be umbrella or PAYE solution with an agency, or PEO that I mentioned earlier. Then that starts to bring into play agency workers regulations, which is all about making sure that a contractor is has got the same access to facilities initially on day one, and then after 12 weeks also has the same sort of pay and holiday pay entitlement as any permanent worker that works for that works for that client. So the key thing to bear in mind is, if IR35 applies and the worker then moves to work in an employed solution, then you've got to consider AWR. If the contractor went to work through the fee payer model that I talked about before, which is where they're still getting billed through to their limited company, then that's not employed. So there's a debate then as to whether or not AWR still applies to that engagement then, because it's been deemed as employed for tax purposes, but not necessarily employment law. So I'd have to take some advice on whether or not AWR would still apply in those circumstances. But typically where a worker's moving across to umbrella or PEO, then certainly it's consideration. You need to factor in, potential rate increases after 12 weeks. But if you've got any views on that, Angela, just thinking it through there, whether or not you've got any view on if a worker's deemed inside IR35 still getting paid through to their limited company, whether or not AWR would apply in that instance.
Yeah, potentially, but like you, it's not the obvious link, is it, in that situation?
It's rare to see it. It's more often than not, it's umbrella where the question gets asked. But AWR is just a process. Again, there was a lot of noise made about it whenever it was, sort of 6-7 years ago when it came into play. But if you get your communication process right with your client and understand if there's a permanent person there, then you can deal with it quite easily. It just becomes a process of communication and confirming if there's a comparator, and if they're paid more than your contractor. 9 times out of 10, the contractors are always paid more than permanent people, so it's kind of a non-issue, but one to be aware of.
You would expect that the good work plan might pick up that kind of thing at some stage. That's typically the kind of thing it's addressing, but nothing's been done specifically on it.
I think everyone's those businesses that are operating with AWR in the mix now. I think everyone kind of understands it and it's the process. And often it's a moot point because, as I said, the contractor's paid more, so it's a non-issue. But it's certainly one that you need to keep your eye on if you've got workers moving across to employed solutions.
Okay, I think this next one then is a quick clarification of something that we did talk about, and it is how far down the supply chain must we validate compliance down?
How far down the rabbit hole do you want to go? I think it's tricky because you could spend an inordinate amount of time trying to prove that, you know, does a company like Giant, for example, does Giant really pay over the taxes that it takes over to HMRC? We see requests where people say, show us a copy of an RTI statement that shows that, or your intermediaries reporting that shows that these payments, well, frankly, anyone can dress up an Excel spreadsheet. So just because I'm sending that across, you could argue it's not proof. Ultimately, I think you need to do enough due diligence to show that you've taken, you know, reasonable care and that you as a business have done everything that you can to protect yourself and try and get due, you know, compliance in your supply chain. But I don't think you need to make it a task which is all consuming to go right into the detail. You know, you should take some assurance from the financial accounts and the trading history of businesses that are out there, like ourselves and other, you know, umbrella businesses, and also, you know, word of mouth in the market should be a big tick in the box. And I think just making sure that you've had a process, you've followed it. If a fee payer then does go bust, and you've shown that you've took your due diligence, then I think HMRC will take a decent view on that. FCSA, as I've said, is a good starter because there's already some due diligence built into that and some financial tests within it as well. But again, don't make it all consuming.
Okay, and one for you, Angela, then. We are a trade plate company. All our drivers are self-employed trade plate drivers. Can we continue to use our current terms?
Okay, so the key point here is if they're self-employed, I'm assuming that means they're just sole traders. If they are, IR35 is not something new here. It's always been the case that an engager of self-employed individuals, sole traders, has had to assess the employment status. What IR35 does is expand that to anybody operating via a PSC, so a limited company. So probably just want to check there whether we're looking at sole traders or PSCs. We can't, you know, if we think there could be a risk that these people should be employees, we need to carry out an assessment anyway, regardless of sole trader or PSC, because the risk is there. And potentially if the sole traders, we've got a historic risk of at least the previous 4 tax years. If they're a PSC, then these rules don't kick in till April, and the Revenue have said there isn't a historic risk in that scenario. So the engager is protected with PSCs for any historic risk. So it's important just to understand that difference. So obviously whoever asked that, if they need any more clarification, I'm happy to pick that one up separately. But yeah, it's not a case you can just carry on. We still need to do that assessment potentially and understand how we can proceed going forwards.
Okay. This next one then brings into play the definition of a small business, which I know a couple of people have asked about and where this applies. So the question is, we're considered a small business, but we're an agency. So does this affect us?
Okay, so really good question and one that comes up a lot. So the definition of a small business is relevant for that end user, so the engager of those services, not the agency or even the PSC. I've seen people ask about. So it is that end client, which is often medium or large, and means that they're actually within this regime. So to be medium and large, it has to have a turnover of more than 10.2 million. It has to have a balance sheet of more than 5.1 or more than 50 employees. And it's 2 of those 3 tests it has to hit to meet that definition. So if that end user, that end client is genuinely under and it doesn't meet 2 of those tests, then pretty much things can carry on as they are, and that PSC must continue to self-assess themselves for IR35. So it is that end client, not the agency, that we're looking at here in terms of who has those responsibilities.
I think one of the things to look out for here is that you could be working for an end hirer who is a very small division of a larger group. If that's the case, they themselves may feel they don't qualify, but they do in fact, because they're part of a bigger group.
Exactly.
So it's the ultimate, it's the end hirer's parent, if you like, that qualifies the size.
It is, it's the group. Everybody in that group would have to be small for them to be outside. So yeah, really good point, Dave.
Yeah. Okay. Probably a similar question, but just for clarification, Angela, we're a recruiting company and payroll limited companies. Does the turnover apply for us, the recruiting company, or the company we're recruiting for? And I think you've answered that really. That's
exactly.
that's the same answer.
Yeah.
So Dan, then, how to structure contracts and specific schedule of works to show outside IR35 status if investigated. So this is an interesting area of statement of works have been raised as a potential way around this. Perhaps you just give us your thoughts on how they work.
Well, I think if you've got a statement of work basis of a contract, that definitely, and it's done properly, then it absolutely takes you outside the scope of IR35. IR35 wouldn't apply if it's struck, but it's the big question is obviously if it's structured correctly. So seen a number of examples where hirers or recruitment businesses have looked to sort of window dress some of the public sector work that was going on around a statement of work, where workers were getting paid on a monthly basis, and then all of a sudden we're seeing statement of works that happen to have 12 monthly milestones in them that still mean the workers are getting paid on a monthly basis. That's clearly window dressing. Nothing material has changed. So the more that I think your contract can specifically price out a piece of work, put deliverables within it, the more that you can make the basis of payment based on that deliverable than just simply time. So, I'll pay, I'm looking at getting a kitchen done in my property. I bring in a kitchen company, I pay a deposit, I pay an amount of money agreed at a certain point in time, and I pay an amount at the end of it for them finishing the project. Then that starts to look more like a piece of work that will be outside of IR35, but it's all in the detail of the contract. I think one of the challenges around statement of work is that the contract itself can be structured that way, but do any contractors actually want to work on that basis? Because they're having to have a inconsistent way of getting paid, and there should also be some risk in it for the contractor. So in my kitchen example, if at the end of it, I'm not happy with the finish and I reserve the right to not pay 10% of that overall price, there's some risk in it for the company. They've got to make it right in order to get that final payment. So I think where you can get some risk into the arrangement and the contract is taking some risk on the delivery, then that's really looks great from an IR35 perspective. And if you can take a piece of work and move it to that, then yeah, absolutely, it is an option. But I don't think it's necessarily when you get into the practicalities, it's so easy to apply to every engagement. But yeah, we are certainly seeing a lot more sort of statement of work activity in certain areas.
I suppose it's also possible that statement of work contracts might attract more attention. So you really need to be sure that they are outside if you're going to change and implement them where you haven't perhaps done so before.
Yeah, possibly. I think there's obviously a lot, there's a lot of big consultancy businesses out there already that have got statement of work type engagement with their clients, but that just means that for them, they've got the IR35 headache of working through the contractors that they engage, and are they getting paid like employees, or are they getting, are these risks that they're accepted in their contracts up to their client flow in some way down to the contractors. So it's one that we'll probably see mature, but I don't think it works in every arrangement. Some situations are genuinely people need somebody who's an expert to come into their business, but there are a number of tasks and they want to extend it over a period of time, and the reality is they're just bringing in this expertise, and that would look more inside IR35. If you can specifically nail down specific assignments for specific tasks with specific end dates without rolling contracts, then that's a much better way to structure it, but that's always been the case.
But this next one then I think could be a webinar in its own right, but we'll ask a question and touch on it and just give us some of the nuances we need to think about, Angela. So how do we deal with clients abroad? Does the responsibility flow down to the closest UK entity?
Okay, so we did have a few queries raised about this in the last consultation. So last February, I believe it was, so just about a year ago, HMRC did issue some guidance on clients or end users who were wholly overseas and didn't have any UK presence. In that case, they are excluded from the IR35 rules. But where you might have an overseas engager who has a UK subsidiary, then potentially they are brought within this regime. But you just really need to look at the contracts, who that individual is contracting with to provide those services. So potentially for it to be exempt where genuinely somebody is completely outside the UK. Just to sort of expand on that, I do see quite a few questions around this, especially in the COVID world, actually, which you mentioned this question before, and that's we have a lot of people who are perhaps working remotely outside of the UK because maybe they went home for Christmas before lockdown and they've decided to carry on working overseas. We just need to be really careful that people aren't creating any sort of tax withholdings in these companies abroad and issues for UK engagers. So just one really just to make sure people are watching and tracking where their workers are actually carrying out their work. But to sort of revert back to that initial question, if that end user is genuinely completely outside the UK with no UK presence, then there is no obligation for them to look at these rules. It will be the PSC who carries on self-assessing themselves in the UK.
Okay, and on a similar vein, this is obviously a question from a contractor. So if the company who pays me is exempt, does IR35 still affect me? Dan?
So, yeah. Sorry, Dan.
Yeah,
no, it's one for Dan, you're right.
Talk together. Yeah.
Angela answered it before. I think it's the same thing, which is if IR35 always applies. The only key here is that if the company is not a small business, then this new regime around determination, responsibility and risk through the supply chain applies. But if you're working for a small company, then you as the contractor would have the responsibility of determining your status, and it's you that carry the tax risk. So that's the key here. If the hire is a small company, the old rules apply, i.e. it's the hirer's risk and it's the contractor's risk and the contractor to make the decision. If they're a bigger business, then it's this new regime that we're talking about.
Yeah. Okay. And this next one then I think helps us to kind of spell out the difference between individuals and the contracts they work on. So the question, Angela, is contracts for candidates. Do you need separate contracts for private and public sectors?
I think that the key with this question is that every assignment should be separate, and the revenue will look at each individual assignment for IR35. So quite a few of the tax cases that we've had going through the courts, each assignment has been reviewed in isolation. So genuinely, I think as Dan alluded to before, you might have people who have inside and outside of IR35 assignments. So yeah, it's really important that they are separate and they're ring fenced, so it's obvious exactly how the payment's going to be made and how that working relationship is actually reflected. So yes, it is important that it's something that's separate and not just a multiple contract, because it can get quite complicated then.
Okay, and time for one last one then. I'll give you 1 minute on this, Dan, because I'd like to wrap up on time. So a question, interesting. Insistence on FCSA umbrella companies. Why not just a good one?
Yeah, good question. Well, it depends what you mean by good. If you mean good as compliant, then yeah, absolutely. Just pick a good one. You know, I'm certainly not here to say that FCSA is the only way forward. Same as any sector. It's just that we know through the FCSA there are certain benchmark tests people have to go through, but there's absolutely no. I'm not here to say that if you're not FCSA as an umbrella provider that you're not compliant. The challenge just becomes, though, how do you actually know that payroll company is a good one? What due diligence are you doing? And as I said earlier, don't just rely on FCSA. You should have your own process for your own comfort, and then you can be assured that you have picked a good company. Okay,
good. That was just 1 minute. Well done. Thank you. So thanks to you both. That was great. That's all we have time for today. Many thanks to our speakers and to you all for your attention. I see you're nearly all still there, which is great. We trust it's been worthwhile, and I'm sure you're all dying to know how you now feel compared to how you did when you started. So I can tell you that there were 18% who weren't at all ready when we started, and that, thanks to you guys, has now dropped to 6%. So I think that's the result. That's good. That's well done. We're a bit stubborn when it comes to reasonable and fully ready, because the 73% reasonable has now moved to 74, and the yes has moved as well, quite well actually. I think from 9% to 19%. So pat on the back. I think you've moved 10% of people into the complacent camp, which is great.
So, to me and Angela, thanks everybody.
Yeah, so no, that's very good, and so I think that says it's been worthwhile. That's great. We will be following up with a link to a recording of this session, and that email will have a quick questionnaire for you to let us know how we've done. Contact details will be there for Angela and Dan if you want to discuss your specific situations. They'd be happy to do that. And please also let us know either before you go today or any time if you'd like a copy of the first session as well, just to sort of give you the full picture. So thank you again for your time. Goodbye from me, and goodbye from our panel. Thank you all.
Thank you.
Thanks.